Hey guys, welcome back to my next YouTube video, and in this video I will be talking about why you should consider buying NIO and why it may be a good stock to have in the future. So NIO got a price target raise from JP Morgan to $46 from $41 today. In case you didn't know, NIO is a China-based electric vehicle company that is becoming a direct competitor with the popular company Tesla. NIO went public at $6 a share back in September 2018, and through 2020 shares have rallied as the Chinese EV market has rebounded, which has helped double delivery rates from a year ago. NIO sales, however, slumped at the start of 2020 due to the coronavirus outbreak, which originated in the Chinese city of Wuhan. But, however, sales quickly rebounded, and in Q2, NIO deliveries more than doubled, jumping 191% year over year. In Q3, NIO deliveries grew 154%, and at the start of Q4 in October, NIO deliveries doubled, the company said on Monday. Also in October, NIO achieved a production milestone of 5,000 vehicles in 1 month for the first time. Wall Street is growing more bullish as a result. On October 29th, Morgan Stanley stated that NIO stock, a strong EV leader in the making, the firm hiked its earnings forecast and price target on NI stock, citing strong sales momentum. Earlier in August, the firm saw an improvement outlook for NIO and earnings for their cash flow. So as you can see, they have a wide variety of different vehicles, and each one is electric. So in October, JP Morgan forecasted NIO could take a massive 30% slice of the premium EV market. The firm cited in part the expected debut of the new affordable electric sedan. NIO currently sells the ES8, the ES6, and other electric SUV type vehicles. NIO delivered 20,565 cars last year, making an 81% year-over-year increase. However, the company's financials still remain a little tough, with net losses exceeding its revenues, and gross margins mainly remaining negative, although it is indicated that the metric could turn positive in the upcoming quarters. NIO has had to periodically raise capital to survive, and its fortunes are also heavily tied to the Chinese government, which could have a more say in NIO's operations after it invested about $1 billion in the company in April. So let's take a look at Tesla. Tesla, on the other hand, is relatively more mature and is expected to take a turn for profit for 2020. Total deliveries grew 50,000 to 368,000 cars in 2019, although expected growth is to slow in 2020. The company's lineup is also more diverse compared to NIO. The company's lineup starts with the lowest price model, which is the Model 3, which starts at $38,000. And Tesla's business model is also looking increasingly viable, with gross margins standing at over 20%, and the company's risk of failure is now low. Tesla also has a competitive advantage in the self-driving software space, given its large base of vehicles on the road and has among the lowest battery costs in the industry. However, I do still believe NIO is an amazing growth stock to have in the upcoming years, and many other analysts feel the same way. So let's take a look at the chart for NIO. As you can see, they went public back in 2018, around $6 a share, and as you can see, since then we've had a little bit of a decline. It has hit lows of around $1, but they really came into the scene at the beginning of 2020, as I mentioned before, and we have seen an enormous amount of growth. This is exponential. You can see at the start of the coronavirus back in April and March, it didn't really have that much of a drop. But then when they started reporting good quarters and more deliveries, and that's when the stock just shot up. And as you can see, recently we have hit highs of all the way to 45. And as I mentioned before, JP Morgan gave this stock a price upgrade. So I think it is a little bit overextended and up there. So I do think this stock is a little overextended and kind of up there, just because it's had several green days, massive days. You know, this rally started back at 33 and it has jumped up over $10 and more. So before I actually get into this stock, I would like to see it have some sort of pullback. You know, maybe it could go to, you know, this general support area right here at $41. That's where I would like to get a gun entry, because we had this massive run up, just like I stated before, and we need some type of pullback to where we cool down. And even I wouldn't mind, you know, a pullback down to 35 price range, just some type of price point where you can get in at a good price. Because right now, if you got in, you'd basically be chasing the stock, because if you got in at the top and it did pull back, you would be stuck here. So be patient when you're looking for your entries. Now let's take a look at Tesla stock compared to NIO. Now Tesla has been around a lot longer than NIO, so it's seen a lot of growth as well. As you can see, when it went public back in 2015, it didn't do a whole lot for, you know, the last 4 years really. And then back in 2019 and as early as 2020, that's when we've seen just exponential growth for Tesla, as electric vehicles have seen, you know, a massive influx in the market, just because they're becoming more and more popular as we're moving to a greener environment. Because right now we're still, you know, depending on gasoline powered vehicles, and that is really hurting the environment. So eventually I think that we will slowly rely on these electric vehicles, and Tesla and NIO will be, you know, both at the front as leaders in this industry. So as you can see, Tesla had this amazing push up at the beginning of 2020, and then when the coronavirus happened, we did have a crash and hit lows of $74. And then since then, though, it hasn't looked back at all. We've just had an amazing run up. And I think last quarter was Tesla's first quarter reporting, you know, positive earnings, that they didn't actually have negative earnings, meaning that they actually made money this quarter. So that's a huge plus for Tesla, as they are now starting to get out of that infant stage of a company and are starting to become more and more stable. So both companies are great to have in your portfolio, but I think NIO is on the rise and could be the next Tesla. A couple of days later, and as you noticed in the earlier part of this video, I talked about how NIO is all the way up here at the $45 range. And I talked about how you shouldn't chase it and let it pull back. And look, that's exactly what it did. We actually got the pullback all the way down to $38. So this would have been a perfect buying opportunity. Instead of just chasing it like I talked about, you wait for the pullback, you get in your entry. And right now, if you would have got in around this area, you would have been up, because today we're up another $1.37 back up to around the $43 range. So this is just a little update and to explain to y'all why it is important to wait and do not chase stocks, because pullbacks do happen, and then you can just get in at a better entry and just ride it back up. As we eventually transition into a world with nothing but EV vehicles, NIO will be at the forefront along with Tesla. Anyway, I thank y'all for viewing this video, and if you did enjoy it, make sure to like, comment, and subscribe, and I'll see y'all in the next video.